Okay, we're going to kick off now. Good afternoon, everyone. Thank you for being here in the room, but also online, as I understand that this is a hybrid session. So greetings also to the people that are online participating in this session. I'm happy to introduce this session on blended finance solutions for wash lending in Cambodia. And I am Álvaro Ma. I'm Impact Finance Manager in Agua for All. And I will be moderating the session, but also presenting a part of it. What do we want to achieve, or what do we want to have covered in this session today? We will start first with a brief introduction of who's sitting in this table and our organizations. That will be very brief. Then we will jump into presenting the EcoCredit and Aqua for All partnership around wash lending. And then we will highlight the financing structure that has been set up around the transaction with Shamron. And then we will cover the progress and insights and outlooks that Shamron has gotten on wash lending so far. And of course, at the end, we will have time for questions and discussion. That's what we want to cover. So if we start then, the people sitting on this table is myself, Álvaro Ma, Impact Finance Manager in Aqua for All. We have on my left Hans Perk, who is the Director of Specialized Finance and Community Building in EcoCredit International. And on my right, we have Yannick Milev, which is CEO of Shamron Microfinance PLC. Very briefly to cover our three organizations, Aqua for All, for starters, is an international foundation with more than 20 years of experience in the wash space. We are funded by the Ministry of Foreign Affairs of the Netherlands, who have provided us with funding of 40 million euros for a program of 5 years to develop the wash economy in Africa and Asia via using it as grant money to catalyze the growth of SMEs, wash SMEs, but also to mobilize private capital. We have strong in-house expertise in water and sanitation experts, but as well, we have a good team of innovative finance staff. Then on EcoCredit International is a global impact investor established since 1975, which has over 1 billion of assets in portfolio. We have Shamron as well, which is a microfinance institution providing financing to low-income population in Cambodia. It has a portfolio of 37.5 million in credit and has the ambition of growing its wash presence in Cambodia via households, but also SMEs.
Thanks, Alvaro. And then a few more words on EcoCredit. We invest as an impact investor, debt and equity in 33 countries in East and West Africa, Latin America, South and Southeast Asia. And we manage that from 13 regional offices, which makes, I think, EcoCredit unique, having multiple offices in the countries in which we invest. We invest in financial inclusion, agriculture, a number of formal value chains, but also informal value chains, and renewable energy, mini-grids, solar home systems, and cook stoves. And since a year, we are developing our community-focused approach, meaning that we are looking at the resilience of communities and investing in affordable housing, education, and wash, which we'll talk about today. And our typical ticket size is about 500,000 to 10 million euros. Then I'm going to say a few words about the partnership. I think we can have the next slide. Yeah. On Aqua for All, as Alvaro already mentioned, a Dutch NGO mobilizing private investments as part of this, the partnership we have with Aqua for All. And EcoCredit, as I already mentioned, we're exploring opportunities in for us, new sectors, wash and affordable housing, two of them. And for this stage of our approach, we are looking into doing that via microfinance and financial institutions, part which we are very familiar with as EcoCredit. Yeah. And then that's what it looks like in a picture. Oikocredit providing the liquidity, the loan, together with Aqua for All, the guarantee or the incentives, which I think Alvaro or Yannick will talk about a little bit more, and the technical assistance package. Together, 15 million euro investment from the Oikocredit side and 1.5 million euro from Aqua for All. This is then what the structure looks like in a bit more detail. Oikocredit providing the liquidity to the FI and Aqua for All the de-risking and technical assistance. And that the de-risking can look like, for example, a first loss guarantee, technical assistance in the form of market analysis, product development, training of staff in FIs, and the FI providing the wash loan to SMEs and households, and of course, in everything goes well, also the repayment. Yeah, thanks.
Yes. Now I'm gonna speak a few slides, 3 I believe, on the financing structure, specifically on the transaction with Shamroon. Using the same picture as before, we have a transaction that is composed of both liquidity, technical assistance, but also de-risking. And that's gonna end up having a direct benefit on the end clients, and specifically on small private water operators. That is what Shamroon tries to grow into. The de-risking component, it will probably be in terms of first loss capital, and the technical assistance has already been committed for a market assessment and product design, which Shamroon has already concluded. This is how it looks in a chronological phase. We have 2 parts. Part 1, which was concluded or signed in Q4 2021, which was the technical assistance for the market exploration and preparation in the order of $20,000. And for this, Shamroon hired a consultant that has performed the work, and the findings have been shared with Shamroon already. And then part 2, which is what we are currently working on and planning to close by the end of the year, is the de-risking part together with the liquidity. The de-risking, again, will be targeted for WASH SME, specifically private water providers. And the liquidity of Oikocredit will be earmarked specifically for WASH. The de-risking will be in the order of $200,000, and the liquidity of Oikocredit will be in the area of $1 million.
Which was approved this week, by the way. So.
Excellent.
Yeah.
And now, Yannick is going to talk a little bit more about the insights of Shamroon.
Okay, good afternoon, everyone. Thank you for being here. So this is, just first an oversight of the situation in the water market. I'm not going to read it all, but I think first key point is that 40% of Cambodian households are connected to piped water, with the government having the ambition to have that be 100% by 2030, I believe. The strategy for connecting these families to piped water includes government, public, and public-private partnership organizations who deliver piped water essentially in urban areas, and then for rural areas to use the private sector as a tool to reach that number, namely through the private water operators. So those are private businessmen, essentially, who apply for a license with one of the ministries, the line ministries, and who are given the right to basically sell water within a given area, and they have a monopoly in that area. And so they basically have a certain number of conditions in terms of quality, in terms of pricing that they need to follow that is determined by that line ministry, and then they have to report to that line ministry regularly. So that private sector, the PWOs, the private water operators, are those that we're going to be targeting in this project. And so that represents around 50% of the market in terms of access to pipe water is through those private water operators. Research was done by the Palladium Group to assess the amount of investment needed in order to reach that 100% of connection, and specifically on the PWO section, and that was estimated at around 150 million USD. in order to get those PWOs to reach that target. Of course, there's no dedicated commercial borrowing that's available to those PWOs. So they access financing in different ways, and there are development projects, subsidized financing that is available to them in some level, but definitely very short of the full amount of that 150 million that's required. Okay, so at Chamran, we have experience with wash financing, but for end users. So we've been doing that since 2012, partnership with water.org, namely. So currently we have about 1.5 million USD outstanding with about 3,200 clients. And that's for selling water filters that we sell in bundle with business loans, building of latrines, water pumps, etc. So that's an active program. It's around 600 loans per month that are disbursed specifically on that sector. And since 2012, it's been around 11.3 million USD disbursed, mobilized for that, and over 36,000 loans that have been disbursed in that end user financing. So, question of why we're going to SME lending, and I'll talk a bit about the loan products later. But that's not microfinance anymore. So we're working with businesses. You'll see that require loan amounts of up to $250,000. So the path that took us to that rationale, and I think it's important to highlight that, was in the agriculture sector. So we were expanding strategically. I'll cut that story short, but to go deeper into agriculture financing, and we're trying to find ways to do that more efficiently by reducing risk, and we thought, let's talk to institutions who are already set up in agricultural areas, who we can kind of piggyback or capitalize our lending with to help generate leads, to help manage risk, to help maybe disburse and collect loans. Let's see what we can do to use the social capital in the rural areas in order to further this rural lending and deal with some of the issues of agriculture financing that you all know. So one of the groups that we talked to were agricultural cooperatives. And talking to those cooperatives, they were saying, yes, well, why not? We can maybe act as agents on your behalf. A lot of them already do credit financing anyway. So it was something that but they said, but what about us? Why we'd like financing too. And so the more we talked to cooperatives, the more they were saying, we need financing as well. So yes, we can help you with that outreach to our farmers, but we need financing too. As that conversation went on, we realized that we do a lot of financing for smallholder farmers. We have dedicated loan products for smallholder farmers, essentially to buy inputs. I mean, that's the main financing goes to that, and that's good, and we continue doing that. But that doesn't actually deal with the systemic issue that farmers have in accessing markets. And talking to these cooperatives, it was really institutions that were there to enable those farmers to access markets and limit the risk that we have with them, improve their livelihoods, et cetera, et cetera. The reason I'm talking about that is because that's what took us to our SME lending program, where we decided to focus on those SMEs in priority sectors that are actually systemically addressing issues that our primary market have, in terms of accessing basic services, accessing markets, whatever it is. And so we devised that program into 3 sections, agriculture, energy, and water. And for the water section, then it was to look at these PWOs and see how we can then support the families that we give loans to have access to clean water in a more sustainable way. So that's a bit the background of why we're doing this. And we see that there's, in terms of theory of change, there's a logic there, a virtuous cycle, in terms of lending to those low-income families and to those SMEs that really target them to improve different aspects of their life. Also, Cambodia is a very competitive environment, as you all know, and it's important for us to diversify, to be innovative, to find niche markets, and to find a value add as an institution to be in alignment with our mission. And so again, that SME program really fit that bill of supporting that mission and that competitive challenge that we have in Cambodia. So then we had a few discussions with Oikocredit and water.org about 6-7 years ago probably, and then COVID happened, and then many things happened, but Little by little, then we got introduced to Aqua4All, who then helped us to finance that research and develop the loan products that I'll talk about in a second. Okay, I have it on both, so. Okay, so for private water operators, usual story, collateral requirements and loan terms, and loan terms, I mean the duration of the loans, were the main challenges that were raised. So typically they were getting individual loans and not business loans, and they were collateralizing them with their personal assets, generally land, as you know, in Cambodia. And there was a limitation to that. A lot of the PWs we talked to during the research had access to some financing, but definitely not to the level that they needed to really get to that last mile. So on average, they had 40%, 50% of the households within their catchment area that were connected to the pipe water, and the rest, one, there were challenges, of course, in terms of they were the more remote, less dense areas, but also in terms of accessing financing to build the pipes, to upgrade the pumps, all these technical requirements that they're challenged with. So those were the barriers we saw, and you see what they wanted financing for was essentially the pipe extensions, but also upgrading of treatment facilities, transitioning from diesel pumps to solar pumps, operating expenses generally, improvements in technology. So all of these items were what they were interested in getting financing for. And the amounts they were requesting varied greatly. There's a big range of types and sophistication and size of these private water operators. So for the smaller ones, from $20,000 up to $1 million for the most sophisticated ones who had licenses for multiple areas from the ministry. Surprisingly, the main risk that they had identified was the road works damaging the pipes. So the local authorities were mandating local construction to improve the roads. Those guys would come in with bulldozers and break the pipes, and the private water operators would go to the local authorities who would say, not our problem. And so we are trying to find a solution to that. And then definitely an issue of technical capacity. So it's an engineering, very complex effort to pump water, treat it, and then distribute it to rural areas. So there's a strong gap there in terms of, namely, when you're expanding and you're dealing with different, higher levels of pressure and all the. I'm not an expert, but I can imagine the headache that it is. Yeah. Okay, so this is what we offered. We're planning to offer. So I wish I could have come here with saying we've done it already, but well, things take time. So we are going to be recruiting a dedicated SME WASH officer. We're having a meeting next week with a potential candidate, and we hope to disburse the first loans in January, February. So we have the loan products ready. The eligibility are the small to medium-sized private water operators. So generally the ones that need $300, $500, $1 million. First of all, we're not comfortable with those levels of financing. Our average loan size is $700. So, it's first of all, there's a capacity issue there, but also there's more of a demand, a lack of financing for the smaller ones than there are for the large ones. The large ones usually can access impact financing at ticket sizes of $500 to $1 million. While for the smaller ones, that's really where the gap is, and they have to deal with these individual loans that are challenging for them. So we've capped the number of households connected at 3,000. It's probably more around 1,000 connections active that are going to be the size that we'll be financing. And as you see here, 85% of those 400 private water operators that are currently licensed have less than 3,000 connections. They need to have an active license and to have been operating for 2 years. So we do, at least initially for this pilot phase, want to focus on those that already have that business acumen and hopefully know what they're doing. Let's see when we do the first applications what that looks like. So in terms of financial and non-financial products, so this addresses the second risk that I mentioned earlier, which was related to their technical capacity. So we're going to be working with an expert in the area of support to private water operators. It's a social business that's an offshoot from the French NGO GRET, and whose work is basically to support development actors and some of the kind of subsidized financing initiatives with banks to to support those private water operators in developing business plans, treatment facility, construction, et cetera, but really on the technical engineering side. So we're going to be partnering with them to basically build our capacity first, but also to then provide support to those private water operators in terms of getting those expansion plans being a bit more in line with regulation, first of all, and more solid from a sustainability perspective. So we've developed two products, one which is a private water operator loan, that's going to be up to $250,000, max of 84 months, so those are unusual in terms of term for us, but that's really what the business financials showed, that there's a small margin there, especially for doing investments in capital expenses, and so they're asking for longer loans. So we'll see actually how that plays out. It doesn't have to be 84 months. We'll look at the numbers and the cash flows to determine what the loan amounts will be, but at least we know we can go up to there if needed. And then a second loan, which is dealing with that risk I mentioned of the pipe breakages, which is an emergency loan. So that's going to be a pre-approved amount of 10% of the loan or 10,000, whichever is smaller, that can be disbursed in a few hours. So with a simple, take a picture of the breakage, send us a short demand, and then we'll do all the contracting and the e-signing and all that digitally and disburse to their bank accounts, hopefully within the day. Again, this is a pilot phase, so let's see how it all plays out and whether that is a demand and whether that is useful. But we thought let's try to build something that's going to address that issue. Okay, so where we're at now, research is done. Underwriting tools are mostly done. So we've developed a dedicated loan application for those that are informed by the research that we did in terms of their cash flows, in terms of their financial ratios, asset structures, and all that are really geared towards those businesses specifically, and then put into our MIS and our core banking system. Products are done. We have initial negotiations with that provider of technical services, and we're looking at about $2 million in investment over the next 2 years. Again, it's a pilot, so we're going to do take stock after the first six months, see what the demand is like, see what the markets, see where we need to make adjustments in product, process, whatever it is. We're finalizing, as Alvaro just mentioned, the agreement, and we signed that's done, so I can take that off. Thank you. Yeah, exactly. And as I mentioned, I'm going to have a meeting with a potential dedicated loan officer for that program next week. Yeah, I did do that. Okay. So just some insights, which I thought were interesting. So first of all, the users from these pipe waters do not drink the water. So in terms of access to potable water, if we're going to tick that box of improving access to potable water, it is potable, but people are not drinking it. So it's a behavior change issue. I think that's true across many markets. The taste of the water, and the trust in the water, which is not completely unfounded, is not 100% there. So we will look to see how we can try to address that to some extent. A few ideas here. There's a really good regulatory framework in terms of quality of the water and how that's assessed. Many indicators to test the water. They're supposed to come on site, test the water on a weekly basis. So there's supposed to be a daily report of the quality, which is important if you're distributing potable water. But what actually happens is that they take a sample of water once in a while and send it to the district representatives of that ministry, and they could pretty much take the water from their bottle and put it there and send it. So there's little actual control there. So in my understanding for the discussions with them, the risk of actually people being poisoned is pretty much inexistent, but it's still obviously a big concern. So what we are looking at doing is requiring, if that private water operator doesn't have the system in place, the testing equipment, to actually have that need to be part of the loan proceeds, to actually set up testing equipment and maybe potentially some reporting to us. So we'll have to see how that plays out again. They're going to be very reluctant to any conditions that we impose on them, but at least purchasing testing equipment and maybe seeing, being in copy of reports being sent. Let's see what we can do. And so other ideas that we're looking at is there's a cost for household, even though that's regulated and they do respect that. There's a cost to for the households to connect to the private water operator, so we can integrate a loan with the private water operator so that they pay the loan over a certain, let's say, 6 months, integrated to the utility payments. So that's something that we're looking at. As well as distributing water filters. Because as I mentioned, they're not drinking the water. So what they're doing for drinking water is boiling water, using charcoal, using wood, whatever it is. So if we can distribute these water filters, which we do anyway already through our WASH program, then we can integrate also the repayment of that water filter through the payment of the fees. So again, things we're looking at right now, we're going to focus on that key business of distributing those loans for private water operators. Yeah, that's it. Thank you.
Thanks, Yannick, Hans. Now we would like to open the floor and also the online platform for questions. So if you are online, please send your questions online. I will get them here. If you have questions in the room, I don't know if there's a microphone or you just answer the question. Yeah, please go ahead. Yeah.
When does it kick in, or what? Oh, sorry.
Maybe quickly repeat the question, Lopez.
Yeah, for online as well. No, it's about the mitigation aspect. I think that's what you called it, right? The 200,000.
Yeah.
Just curious how it works.
Yeah. So that's currently the de-risking part of the transaction that we are in conversations right now. In principle, what I can share is that it's a first loss capital kind of facility where basically in case the loans would go into arrears of, let's say, 91 days or more, then the first loss capital would be activated, and would cover up to a certain percentage of each individual loan. Let's say, in this case, up to 75%, let's say. And then the other 25% would be assumed by Shamroon in this case.
Okay, of each individual loan.
Yeah.
Ah, okay.
Yeah, up to a certain cap. In this case, around $200,000.
And in that case, how do you determine what the appropriate? I mean, I guess it's a negotiation, but I'm just curious, how do you end up with this? Because you could have done a lot of different things, right?
Yeah, I think, there's not a scientific formula, but I think to a big extent what we've been doing in Kenya, we've copied to a big extent that, because there we've been working around not providing a guarantee for the full portfolio, but focusing more on a smaller portion of a portfolio, but with a higher coverage. So as to make you would say the coverage of the de-risking more effective, and actually for it to have a higher chance of being used, because we in Aqua for All have higher risk capital. We are comfortable taking this risk. It's a refundable grant that if it's used, great, and if it's not used, it comes back to us. So we are comfortable taking that level of risk and structuring it in this way. So it's a refundable grant that works as a de-risking instrument. Make sense? No, it's okay. Happy to answer those. Any other questions?
Maybe just to add that from our perspective, what was important is to have a higher coverage per facility, ensuring that we still have, we take the risk there as well, but have a higher coverage per facility and lower per portfolio. We feel that it's going to be a bit of a fluke effect if one of them does default. So it's not, if we could have gone for 25% per facility and 50% of the portfolio, but that doesn't, no, we couldn't have done that. But anyway, you know what I mean? It was important for us to really deal with that kind of, an issue we couldn't have foreseen that was, maybe not part of the business, and maybe a climate event, for example, or whatever it is that could have affected the water source of that private water operator. So we felt, let's make sure that, one of those facilities may default, which is essentially if we give $200,000, we're pretty much there.
Yeah, and I think that the great thing with working for Aqua for All is indeed it's not scientific, and it's like we learn by doing. So they've been very flexible and as they have this high risk capital available, to actually design something which really fits for purpose.
Yeah, and I think one of our key value propositions is indeed that, as Hans is mentioning, that flexibility, but also being able to customize, and serve certain needs that maybe more commercial guarantee providers are not able to provide. I saw a question. Oh, there.
Yes. Thank you for sharing your experience. It was really interesting. I would be interested in knowing more from Yannick about how your water filter distribution system works outside of your collaboration with the private water operators.
Yeah, that's been a long path to get that to work, and we found a model which has been now working for, I'd say, about 4 years, quite well. And the trick was the bundling, actually. So we tried to do sales, individual sales of water filters, and it wasn't working. We were ready to, take the effort to provide. The price point is like $30 to $50. So we were happy to give $30 to $50 loans, but people were not happy to take one. There's multiple lending issues that you run into if you do that, and a whole range of challenges that were more on the demand side. So we started bundling it. So you take a small loan for your business, and we said, would you like to add a water filter on that? Yes, sure. And then, so yeah, out of 600 to 700 loans we give distribute each month on wash, 80% are water filters.
Yeah, so my question would be, in terms of direct household connections, I want to know maybe the cost involved and also the loan package that you provide households to have a private connection to their house. Then also, you made mention of some service providers who support in doing this particular extension. I want to know the criteria, and also did you do any feasibility study to know that they need a 25K as a minimum capital to do that extension? Thank you.
So the first one was the cost of the connection, right? The cost of the connection was the first question, right? Yeah. 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 The other service providers who support household connection. Yeah. We indicated that there is a minimum capital of 25K. Yeah, 20. Yeah. Yeah. Yeah, so the connection fee from household to private water operators or to non-private water operators are regulated, and it depends on the distance from the secondary pipe, if I remember correctly, which I believe is 15 meters, and then if it's 15 meters from the secondary pipe, it's $80. And then if it's beyond that, then you can add a premium to that based on the number of meters. And there's a bit of flexibility on that premium, but generally, they're not going to be more than 15 meters from the secondary pipe. So that's the cost that we would try to integrate to those fees. And it's regulated, but it's regulated in an intelligent way where, depending on both the price of the water and the connection fees, the ministry will allow for you to adjust it with justification linked to, for example, population density. Because obviously your ratio and your returns are going to be lower if there's less dense population. So there is some wiggle room that the ministry approves at each yearly review of the financials. So that's on that point. And then on the second point of the, so that was a research that was financed by Aqua for All. So we went and talked to private water operators and see how much money they want, what do they want it for, what are the terms that they're looking for. And 20,000, nobody was asking for that. It was generally, I'd say minimum 50, but we put it at 20 in case, there is something that we hadn't foreseen, just give it a bit of wiggle room there.
Other questions? Yeah, please feel free. We have plenty of time, I think, to answer questions.
Yeah, so I want to have some data. In Ghana, back in Ghana, when EU did a similar project within the water sector, so our model was for issues of sustainability, there's always a bit of local ownership. We have what we call the water board, where local members are recruited to manage the water system. So like a 3 water system, a small water system which have all those connections that you are talking about. I want to know whether your model have something like of that sort, where local capacities are built to manage this small water system for issues of sustainability. I mean, you made mention of providing technical assistance, whether knowledge are transferred to these local people, in a way developing the local economy. I mean, in Ghana, back in Ghana, we have a number of systems similar like that. So I want to know whether yours is like that. Thank you.
Yeah, the profile of these private water operators are they're local entrepreneurs. So there's no real community engagement as such in terms of there being a board with the different members who are elected and an assembly. They're individual businessmen from the community who are generally, quite active in other businesses. So they could be in the construction sector, agriculture sector. Some of them involved also in a similar program for electrification with private electrification. So they're businessmen that are quite successful and who have decided to engage with that. And usually they have some kind of a social mission there, to give back to the community, to provide services and improve the livelihoods. So it's these local entrepreneurs, but indeed and then their reporting is to the district level ministry authorities. So that's who oversees kind of their work. But there is a capacity issue. So the local, social business that works with these guys, I say guys, they are generally men, to distribute this water. They have, it's a complex technical effort. So this social business that's going to support them is going to be training them in terms of why you have to choose this type of pipe instead of this type of pipe. What are the advantages to this type of treatment compared to this type? And then they will have that knowledge after. So there is a transfer there.
There's a lady there.
Sorry, and those training costs, are they built into the price of the product, or is that provided through a project or through grant funds?
Yeah, we're negotiating currently a donor funding to cover that for the pilot program and see. So for the agricultural cooperative program that we have, we're with Snoop on that to provide training to the cooperatives. So that's integrated in that TA cost. So far, we need to get it subsidized. Already it's a very price-sensitive market. So we cannot include that cost to it. Although, let's see down the line how we do it. And I think I've been having some discussions with some potential donors here on that. The question is, how much does it add value to our business, and how much does it reduce our risk? And if I don't think that not giving that support is an option, at least for quite a few of those private operators who have low capacity. So in the end, that just may be a cost that we need to do to cover. And I think, at scale, that's fine. So it's a question of getting to that scale. But it'll be hard to transfer that cost, at least fully.
Thank you. Two quick questions. The first one is, to what extent do you consider that you can de-risk the debt that you provide to the private water operators by also delivering debt to the household, so to the final users, and if you are trying to map the type of geographically, for instance, the PWOs that you refinance and the households that you are that you also want to support access to drinkable water. And my second question was, to what extent do you think that you can incentivize the private water operators to actually ensure quality control, so that at the end the water is actually used to drink, which is one of the best benefits that they should get by accessing this water. Thanks.
Yeah, thanks. I'm not looking at the household level financing as any way to de-risk the loan. So I understand what you're saying. You're basically building the market, right? That's what you're trying to get to. Yeah, I think there's we want that's why we're at least, initially we're working with those that have a critical mass of connections already, have been working for 2 years. And generally the challenges that they have are not, there's a few issues of, you know, very low income households in villages who are hesitating to connect. But once they get the pipe to that village, generally, you know, there's a buy-in of, let's say, 75% of the households to that to that connection. So I don't see that much risk there of kind of like making that investment and then nobody's buying in. And indeed, why are they buying in? They're not drinking the water, right? But it's still a huge energy and cost saving for them to have that tap at the house. Water is cheap. Again, it's regulated, so the cost of the water is very low. Yeah, for dishes, for washing, for laundry, for all these reasons, you know, they have access to that water. And they can also then tap that water and then boil it. So again, a lot of saving there, even though there are issues around that, and we would like them to move to, you know, but you know, actually I know that the quality issue is there to some extent, but that's not really what's stopping them from doing that. That's really a behavior issue. That's more in terms of what they're used to doing, the practice, and the taste. And that, there's nothing much we can do about that. And I've seen that in many geographies where people just, you know, you provide an easier way to get potable water, but they don't like the way that it's being treated. So that's more actually a demand side, a behavior change issue that, but still, we would like to find ways to encourage the private water operators to provide water that, you know, they know is clean. Because the thing is, many of them don't have the testing equipment even. So they don't know. They're doing all the right steps, and it is most likely clean. But, you know, we'd like to have a little bit more certainty there.
Yeah, I have a question for Hans. So you extended the WASH investment to Chamron for this project. In the perspective of Oikocredit, what makes the difference between a WASH investment and a regular microfinance investment?
The usage and the terms. Well, if you're a financial service provider, I would say we are still open for business, and then we can actually do business. And I think it's maybe also a good moment for a commercial break, because it's indeed so that we have still a partnership with Aquafol, which is open for financial service providers in East and West Africa, in Cambodia, in Indonesia. But yeah, I think what Yannick already explained. So there's a term for these water providers which is different from what we normally will be providing. Yeah.
Other questions on the room? Maybe to follow up on the question of Alexander on the risk mitigation for Yannick. You've shared a little bit about the risks that came out of the study, right? However, my understanding as well is that the cash flows that come via the private water operators are quite stable. Do you foresee any other kind of credit or repayment risks that are, or to what extent you assess that these to be low, medium, or maybe high, you know, from what you've seen so far?
Yeah, you should have asked me that question before.
Yeah.
No, but you did ask me that question before. So in the initial phases of the study, one of the other providers of, but this is a subsidized kind of program financing, was providing loans with repayment terms that had a seasonality to them, because the usage of the families of the pipe water changed depending on the season. So during a rainy season, they used the water from the pipe less because they could collect the rainwater because they're not drinking it again. So there was a cash flow, a little bit of variation in income, and talking to the private water operators, we asked them systematically about whether seasonality was something that, you know, they saw as material in terms of adjusting a product that would match that, and they all said no. They all said they want you know, stable monthly payments. They say it's easier for them. The variations aren't that big. And they have other businesses generally that come to finance that. So the main risk was really this pipe breakage. And we tried to look at it and flip it every which way in terms of climate, in terms of the water source, in terms of the equipment breaking down, in terms of the energy source to pump, in terms of businesses stopping to pay if there's an issue of flooding in an area, and then all those families are strapped for cash that they would. And it was just no across the board. We're very stable investment, and obviously we weren't asking the question as we're going to give you a loan. This was from the research perspective, and it it looked from all angles to be a quite stable and low risk business. So to answer your question specifically. That being said, I've heard that a lot, and then put it to market, and then reality is different. So that's why we do a pilot, and that's what we've done with Chimran regularly. We don't want to talk too much. We just want to go and do it, put it to market. This is where 90% of the learning comes. Of course, we inform it. The research is great, but having this combination with a de-risking facility to put to market for a pilot is key. And that's how innovation is going to happen, through that putting to market and that learning for us. So let's see. We launched a product for aquaculture specifically, and they all told us hard, during the whole research, no, we're not subject to climate risk. We had big floods in Cambodia, and half of them were defaulting because of the floods. So it's there's just a lot more that happens when you've got the exposure with them than when you ask them hypothetically these questions. So I think we're being not too aggressive in our initial exposure, and I'm going to take it slowly and see what the learning comes out. But as it stands now, it seems like a really good business.
So we've made a good decision
Absolutely.
in partnering. Excellent. Maybe to follow up upstream on this same question on risk, Hans, is there risk considerations at the level of the balance sheet of Oikocredit when going into this sector that you can foresee?
Yeah, honestly, I think Yannick just already gave the answer. So we are really kind of getting our toes into the water. Oh, that's a good expression, actually, in this case. Because, and we are also pragmatic. So we say, okay, let's just try and bring the parties together and see how we can do this. And we do that to a limited extent, if you look at the total balance sheet of Oikocredit. So that's, but we also would like to see and learn with this partnership what kind of risks are materializing. And of course, we spoke about it this morning as well. Could say, $15 million. That's really nothing if you look at the need which there is. And that's also why we actually think as Oikocredit, if it works, we really would like to scale. And we would like to scale with partners like Chimran, because we've been in partnership with them for many, many years. So more or less what you get. And that's maybe as well the biggest risk mitigation which we have, working with existing well-performed partners.
And maybe to comment on that, as we are currently, as part of the partnership that we have, we are working with Chimran, but we are also working with an extra lead in Cambodia that we are doing good progress. And we are also looking jointly with Oikocredit on how to open the Ugandan market, but also the Senegalese market, to see and to make sure that there are FIs out there that are willing to build a WASH portfolio, and for us to be able to jointly provide the offering that makes it attractive for them. So just to complement on that, yes. Maybe can you ask in the microphone so that they can hear you?
You had an expansion plan to Latin America?
I would love to work in Latin America. I'm originally from Peru. Also to make some deals in Spanish, but unfortunately for Aqua for All, our program is focused on Africa and Asia, because we need to follow the list of countries that are focused for the Ministry of Foreign Affairs. So that constrains us a bit, but maybe, who knows, as part of our next program, maybe there's the ability of actually moving towards Latin America.
And that is maybe not so good news for Alvaro, although he is not in Latin America, but we are partnering with water.org. We're setting up that partnership to do something which is more or less in the same partnership which we have with Aqua for All. So if you're not in contact with my colleagues in Latin America yet, then I can make that connection for you.
Yeah, so anything in Ghana? Aquafor? Are you in Ghana? Yeah. Since you made mention, Ghana?
No, I mean, we had Ghana in our radar, but we decided to focus to be able to go deeper and be more effective. So Ghana was an option as part of the portfolio that we were looking into, but for now we decided to focus actively on Senegal, and then maybe as we scale, we could open to other markets as well. Other questions? Maybe then to follow up, Yannick, what are we know what the next steps are in terms of our collaboration, but what is would say the medium long-term vision of Chamron in terms of WASH, you know?
Yeah, so for the end user loans, I think we continue, that's mainstream now into our program. So every new branch, every new loan officer is trained on that. There's a specific incentive linked to that. So the whole structure that we set up over these past 8 years with water.org and now with Water Equity is going to continue being rolled out proactively. It's a good value add to our services. And for the private water operators, you know, I think first there's the issue to hopefully see success there and reach that initial 2 million target. If we feel like we can be more aggressive with it and expand, why not? There's some ideas that I mentioned there in terms of integration of household level needs to those private water operators. And then there's also the WASH ecosystem that's there. So there's a lot of businesses that feed into those private water operators, those selling pipes, construction, solar providers for the pumping, lots of other, you know, Connex businesses that are there, and other then looking beyond the water, but in the hygiene sector and sanitation, lots of things we can do as well. So I think that's really, like I mentioned, part of our focus in the SME sector is so long as it is providing services that really feed into that economy that improves the lives of our primary market, which are low-income households in rural and urban areas, we're happy to explore. So there needs to be that theory of change, that link there that's clear and direct. But I would say, yeah, first would be to get this right, integrate those end users, look at the ecosystem of private water operators to diversify where there's liquidity issues within that ecosystem, and then look beyond. But that's yeah.
Thanks. Alexander.
Thanks. So there would be a question for you, Yannick. Have you considered actually entering into the capital of those companies? You know, would you technically be able? And if not, do you think that there is potential for local investors first, or international ones?
Yes. No. Yes. So there is a really some quite cool programs in Cambodia with that. There's one called K-Wash, which is managed by which is run. The main shareholder is Institutor and Obor Capital, who basically purchase the different private water operators and then take them to a certain level of standard, and then act as a kind of apex organization that ensures streamlining quality, streamlining operations, marketing, HR, and energy, and all these things. So there are some doing that. There's another one called Water Effect, Tap Effect, who has somehow similar approaches. So there's some doing that. So that's the third yes. For the first one, we haven't considered it. Because that's just not what we do. We couldn't do it. Having an equity side to our organization is something I have as an idea that's far off in the distance, but I think right now there's a really debt issue, access to finance that we're trying to respond to, which we'll address first.
Yeah. Let's do the last question then.
Tiny, because it's probably not so relevant, but Mille Fontaine, another operator in Cambodia, it took them 10 years, but they were able to carbon credit by proving the change in habit, and so households stopping burning charcoal because they were drinking potable water. Has any, letting the carbon credit market account into the financing scheme of this been considered?
I think for now we've limited our offering to the technical assistance, to the de-risking, and also we're open to providing some sort of results-based financing to provide an incentive payment or an outcome payment based on impact. We haven't yet explored schemes around carbon schemes, but yeah, maybe into the future we're willing to look into that. Yeah. I think we need to close up. But thank you very much for your attendance and for all your questions. I think we had a good session with good amount of questions. I hope we managed to cover extensively the doubts that you had. And of course, feel free to reach out to us offline if there are any remaining items in your mind. So thank you very much and have a good day.